Moody's Investor Service has cut South Africa's government bond rating by one notch to Baa1 from A3. Moodys cited worries about the country's institutions as well as future political stability. The challenges posed by a negative investment climate in light of infrastructure shortfalls, relatively high labour costs despite high unemployment, and increased concerns about South Africa's future political stability. We've got Eric Nell, fixed income strategist at Atlantic Asset Management, on the line. Eric, before we get to you, let's just get a quick view round the table in terms of reactions. Chris, starting with you, going through Bridget and Ulrich.
Yeah, I think the rating agencies have telegraphed this in advance, and of course Moody's is the first one to actually cut the rating. I think it's probably justified more on the thing that government spending is in fact on an unsustainable trajectory under the stewardship of Trevor Manuel. It had come under, it was quite sustainable, and that's why we were getting the credit rating upgrades, and now we're actually shifting since 2008 onto quite an unsustainable path, and it's not being clawed back. It's not about the budget deficit, it's about the spending side, because we know at some stage the tax base will be exhausted, and that's the problem. I'm not sure if they're getting that.
Bridget, let's add your sentiments.
Well, I think that from the Moody's, with regards to the Moody's downgrade, I mean A3 from a Moody's perspective with regards to what we see on Fitch and S&P is maybe a little bit behind the curve. So they're getting back in line with what S&P and Fitch are rating South Africa at the levels that they're rating us. Negative outlook, and unfortunately, as Chris was alluding to, the political uncertainty as well as the unrest gaining a lot of offshore interest, and certainly not boding well for South Africa going forward.
Ulrich?
Yeah, I think that the risk of populism in your fiscal policy, that is one of the big things if we look forward. And what's that going to do to control expenditure by the government? And of course, the alignment of your fiscal policies over the past 18 years, I always feel that we've always supported consumption expenditure instead of supporting the production side of the economy. And if you then have on top of that populism coming into the equation, then you have problems in the long term, whether this is sustainable or not.
Eric, how does the move by Moodys sit with you?
Yeah, hi guys. Some old friends, colleagues, and countrymen on the line as well as John. It's very tough to add a lot of value after all three of those comments. I think it covers pretty much most of the bases. How it sits with me is the timing thereof is probably quite strange, I'd like to think, given that we've got the WGBI inclusion tomorrow and Monday. I'm not sure whether that's really something that was taken in consideration, but nonetheless the timing is quite interesting. What is further interesting is that having had government responding on the potential of sovereign downgrades recently, I'm very sure that government is going to raise an eyebrow on at least one of the reasons given for this downgrade. I don't think it should be seen as flaky reasons. I definitely think that Ulrich highlights a very important point, that policy sustainability is something that we should seriously question here. And Moody's has potentially missed out an opportunity here for first mover advantage. As Bridget correctly highlights, they should have actually cut South Africa 2 notches to have a first mover advantage. So this is really just bringing it in line with S&P and Fitch. So on balance, probably not the end of the world for something like tomorrow.
It begs the question, what are S&P and Fitch going to do? Because I suppose that's the real indication of where we are from a ratings perspective, considering that they are ahead, well, in line with the curve and not behind it, as Bridget has pointed out.
Exactly. So I think this is the important thing, Bronwyn, and you are 100% right. Look, there can be no denying that the Marikana issue has opened a Pandora's box in South Africa from a labour perspective. I think that Moody's is acknowledging this. It highlights this as a key issue. And I think that S&P and Fitch have, obviously, from our perspective at least, we've been writing about this for a good 3-4 months now as a key risk for us. And especially that people underappreciate is the risk of the sentiment impact of something like this relative to South Africa actually needing 3 to 4 notch downgrades to be kicked out of WGBI. This has opened Pandora's box for the rest of them, and again I maintain that Moody's probably should have actually cut South Africa 2 notches for us collectively as a country to get a serious wake-up call. I'm not sure this is the wake-up call.